So, how do you become a SOFI millionaire? I mean, lots of people talk about 100x this or secret formulas and spreadsheets and option trades that show you the path to millions in no time at all. But I'm here to tell you guys that is all fool's gold. So let's talk about exactly how to actually do it today. No magic or unicorns or hype to the moon trash or ridiculous spreadsheets or tools necessary at all. Just a straight truth, because anyone can do this without any of that sort of stuff. That's what we do right here on this channel. Keep it simple, keep it easy. So make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. I know up front, this is going to make some of you guys mad, and that's okay. If you're looking for one of those videos where you basically, buy 5 shares or 50 shares of SOFI today or whatever, and it'll be worth millions tomorrow or millions in 2 years or whatever the case is, I'm sorry, but this channel is not fictional fantasy stock YouTube or X social media post or any of the other stuff that I see out there. This is the truth from someone who's been doing this for over 25 years now, and this method has proven true over and over and over again in my own personal investing and others as well, because it's not like I created this out of thin air. Absolutely not. It's from studying all the greats over the course of all that time. And if you don't believe me, that's fine. I follow this exact method with Palantir being the most recent stock to work with, and I have an average of under $10 doing exactly this. And guess what? It worked in the early 2000s. And it's going to work today as well. So I would kind of call it a tried and true method overall. I'm sorry, it just is. It's not easy, to be clear. Let me be very upfront. It is not easy what we're going to discuss today, but it's not complicated either. So I'm not throwing up these crazy formulas or anything else like that. And I'm sorry, it's not get rich quick either. You're not going to just go from, I got $10,000 now, Luke, am I going to turn that into $1 million here really, really quick? No, that doesn't exist either. You're just asking, that's fool's gold. That's just, it's a story as old as time, right? Get rich quick schemes. Heck, they're in the Bible. They're all over every, Chinese proverb and every other proverb that you read about wealth. All the same, guys. Get rich quick doesn't exist. We're not going to do that today. We're going to get down to things that you can actually do that will actually get you there. And yes, we're talking about SOFI stock specifically, but you can absolutely apply it to any stock that you own as well. So number one, understand what you own and track it. All right, so I know that doesn't make a lot of sense, so let me try to make that make more sense. What I mean by that is so many folks, and I did it as well when I was a young investor, so this is not pointing the finger at anybody, but so many folks do not do actual due diligence on a stock, so they don't understand what you own. It is impossible to spot opportunity from massive problem if you don't do actual due diligence and understand what you own. And I'm sorry, due diligence takes longer than a 30-minute YouTube video or spending a day or two searching various things right here on YouTube. It takes a lot longer. It takes hours upon hours just simply to listen to, the past, 6 to 8 earnings calls or so for that company, much less diving through all the financials, all the different filings, all the 10Ks, 10Qs, all those things of that nature. It takes me, and I've been doing this for a long time, weeks, sometimes months, to work through all the due diligence on a stock, to sometimes just decide, I don't want to buy that stock. I don't feel comfortable with it. It doesn't fit my goals. Maybe I don't understand the business model well enough. Maybe I don't have enough confidence in that management team and their execution. There's a lot of different reasons for it. But if you don't do that level of due diligence in the first place, you can't understand what you own. And that right there is the first key to being a SOFI millionaire. You got to understand what you own. Because guess what? If the stock all of a sudden cratered down to $2 today, if you didn't understand what you owned, this is the same exact thing as, Palantir cratering down to 6 in 2022, or Meta cratering down to 80 in 2022 as well, or any of the other great stocks that you could buy, Nvidia, in the 15s or something, I don't know, in the teens somewhere back then. You're going to believe the narratives. You're going to believe all the, oh my gosh, Palantir is really going to go bankrupt. It's all vaporware. It's not real. They don't have any earnings. They're not growing. They're not doing this and that. Meta's dying. Oh my gosh, Zuckerberg's wasting all his money in the metaverse. He's missing the boat. He has no idea what he's doing anymore. He's lost it. And all the other narratives that kept people from buying the stock back then, and they believed it would just continue to fall into oblivion. They believed that there was a bankruptcy risk with Meta, for example. They believed Palantir was just another meme stock that was going to go nowhere. And so therefore, if you didn't understand what you owned, you didn't buy back then. You were scared to buy instead of loading the boat. When you understand it, you load the boat. And then over time, as it goes, you have to track it. You can't do that work up front. You got to listen to every earnings call. You have to follow the financials. You have to look at all the filings. You have to do all those sort of things consistently over time, so that way you don't fall for any of the narratives. When the stock does dip down, you know exactly what's going on. Bang, opportunity right there. Let me start adding more shares, or let me add heavier on my DCA, or whatever your strategy is. All that cannot happen if you don't understand what you own in the first place and you're not tracking it. And that comes from doing actual real due diligence. Number 2 is continue to stack shares. Now, what I mean by this is you have to consistently buy shares of a great company over time. So many folks play investing like the lottery. Hey, I'm going to put $10,000 in this stock and I want it to turn into $1 million later on. Yeah, that happens. Absolutely, that happens. It's happened with me with Apple, right? $3,000 in Apple back when I bought is now worth 7 figures today. However, I also bought Apple every single time I felt it was undervalued during that time. I didn't time the bottom on anything or anything else like that. So get that sort of stuff out of here to begin with. But I just continue to stack shares on a great company. Now, you're right. Those shares that I stacked, 10 years afterwards, or let's just take 2021, for example. The shares that I bought in 2021, well, yeah, you're right. They haven't gone up like the shares that I bought way back at the beginning, right? But they're still a double up from right now. That's not bad on a stock, on an incredible stock that was just bought a few years ago. Share count is what matters in the end on a great stock, and you will always be saying, I wish I bought more with every single stock as they run. And if you happen to hit your Apple or your Nvidia or the next whatever, Palantir before, right? How many folks are saying, man, I wish I would have bought more. Well, guess what? If you would have stopped buying after 2022, well, you would have that feeling. But if you continue to buy, despite you already having your full position, despite you having bonus shares and continuing to add shares, you had opportunities to add last year in the $20 range. I think even at the beginning of the year, it started off in the teens. So you have lots of time to stack shares, but that's the key. When they get significantly overvalued, I get not stacking shares at that particular point in time. But remember, we're long-term buy and hold investors, and you will get another opportunity to stack more shares. And that's how you become a SOFI millionaire in a great stock. And right now, we're still getting SOFI at what I feel is very, very reasonable valuations. Not great, but it's not incredibly overvalued or anything like that right now. So you just continue to stack shares of a great company. I didn't stop buying it after I bought a bunch of shares in the $4 and $5 range, or a ton at that particular point in time when it started running up again. No, I was buying at 6, at 7, at 8, 9. Okay, I cooled off once it got up over $10, but guess what it did? It fell right back down to $6 again. It seemed like we were playing this yo-yo game there with SOFI for a while. I didn't start at the beginning. I continued to stack shares, continued to stack them over time. And now I have a much larger position and I'm still stacking shares of that stock. And when it finally does what we all think it's going to do in the future, I'm going to be very, very happy that I stacked those shares. And again, my position is going to hit that $1 million mark a lot faster than somebody else who didn't stack shares and just basically went for the lottery investing mentality and just dumped money in once and didn't do anything else after that. Number 3, don't trade in and out. Look, I don't know how much more I can emphasize this, but trading in and out of stocks statistically underperforms dead people. The study has been done by lots of folks. We've done our own study in our group where one of our coaches trips. An incredible study over the course of many, many years, doing all the different kinds of variables and everything else. But fine, you don't want to trust me or trust some of the folks in my group. Totally understand. Guess who else has done the same exact study? Goldman Sachs. Other big Wall Street firms have all done it, and they all say the same exact thing. The people that buy and hold beat the traders inevitably. Who loses to the index funds every single year? The traders, the hedge funds, they all underperform. Sure, they have their years where they overperform, absolutely. But there's very, very rare, there are a few, but it's exceedingly rare for the vast majority of the people trade to just beat a simple index fund. But yet, people that just simply buy and hold routinely outperform the indexes. But yet, right here on YouTube and on X and everywhere else, everybody's trying to tell you when to get in, when to get out, all that sort of stuff like that. And it's just fool's gold in the end. Try to trade your way to more shares and all these other crazy strategies to try to get yourself there that involve trading when that statistically is going to have you losing over the long run. Doesn't mean you don't have wins. Of course you do. But over the long run, you will lose out to those that just simply buy and hold and add on the dips. I'm sorry, if you don't believe me, it's held true through my entire investing career. The studies all show it as well. The Wall Street studies show it as well. But hey, if you want to believe some other random person out there telling you something different or yourself, maybe you're the exception there. That's awesome. But I know for the vast majority of us, I consider myself a very average person. This right here is a strategy I'm going to stay far, far away from because it statistically loses to every other strategy. Number 4, ignore hype and noise. 2 of the biggest mistakes I see from the retail crowd are they either buy the hype or they fall for all the noise and all the negativity. Now that goes right back to number 1 we talked about. If you understand what you own, it is very, very, very easy to spot hype and noise. Now, of course, if you're bullish on the company, what gets dangerous is hype is really, really hard to see, right? Because some YouTuber puts out a great video, or maybe there's a great presentation from that company that's out there, and it gets you really, really excited. But when you come back to your fundamentals, it grounds that sort of thing, and you kind of think through it a little bit and go, okay, that's a little bit hypey. Okay, that's great. I really enjoy that, but it doesn't mean I should pay 1,000 PE for the stock or 700 PE for the stock or whatever the case is. I'm sorry, that's pure hype and hopium if you think that's a valid strategy over the long run. Now, the only caveat to that, or exception I'll make to that, is if you're DCAing, then just continue right on where you're DCA. It doesn't matter, overvalued, undervalued. If you want to do a modified DCA of sorts, to where maybe you add a little bit less whenever it gets over what you feel is fair value, and then add more whenever it's undervalued, that's perfectly valid as well. Definitely a way to kind of get a little bit of alpha there. Or you do a pure modified DCA like I teach, like we do in our group there. You can do that one as well to gain a little bit more. But nonetheless, you have to ignore the hype, and the same exact thing goes with the noise. I couldn't tell you how much of the noise that's out there is utterly false. It's not true. It's again, you think these Wall Street guys are out there trying to give you real answers, all the different analysts, even the ones you like that agree with that you're bullish. If you think that they're not promoting noise because they have obviously a vested interest in the stock going up, the stock going down, them being bearish on this stock and bullish on this stock, you don't understand how the game works, and you really need to pay attention to the fact that that's exactly what those guys are doing, is they're trading their book on TV, and you want to stay away from all that sort of stuff. That's why I tell you guys, ignore the noise all the time. I don't watch any of those shows outside of things that are sent to me in my group, so that way I can give my group members my opinion on it, or whenever we review a video or something like that right here on YouTube. Otherwise, I don't listen to any of it. I don't follow anybody on X. I don't do any of that other sort of stuff because it's just noise. It does not help me with my investing. Where the truth is on anything is in the earnings calls, is in the company filings. Everything else to me is just simply noise to get clicks, get people talking, speculation, all kinds of other stuff like that. If you want to be a SOFI millionaire, you have to ignore all that sort of stuff because it's really high, both the hype and the negativity with this community, right? I mean, heck, I put out a lot of different videos in my group this year, and we talked about it a little bit right here on this channel as well, where, hey, there was a lot of SOFI folks pushing the fact that $75 or more than $100 was reasonable in a year or two for SOFI. Matter of fact, it's almost guaranteed to do that, and there's all these crazy squeezes that are going to happen, and all this just, crazy stuff to the bullish side, which is great if it happens, but I also know what the valuation would be, and it would be so stupidly overvalued, I'd be forced to sell it all, probably way before it even hit any of those prices, because that's how stupid the valuation would be. And then on the flip side, there was a lot of people saying that Noto was the worst CEO ever. And he's a terrible CEO and has no idea how to run a business. And he's losing to all these other businesses that aren't even competitors. But, never mind. Let's not let facts get in the way of a good narrative, right? Let's not do any of that sort of stuff. And so therefore, if you're listening to that noise, you might very well be scared or not understand what you own and be, like, oh man, maybe I shouldn't buy SOFI. Maybe I should buy this other stock instead, when you're just listening to the noise and a narrative, not the truth of what's going on in those earnings calls, in the earnings themselves. Or maybe you believe that hype projection, and then when it doesn't come true, then you believe the noise over here on this side. I don't know. I just know you have to not listen to either one. All right, so on to the last point now, and it is probably the most critical, and it is also the hardest one to do, guys. I'm sorry. I hate to break it to you, but this one right here is the hardest one to do. And that's right. I know it's hard to ignore the noise. I know it's hard to not trade it stock, especially when it goes on a great run. I know those things are hard, but this one right here is by far and away the hardest. So number 5 is to hold for the long run. I know that seems so simple. Luke, all you got to do is just hold it and forget it. But yet that is the hardest thing to do as an investor, is simply to hold and be patient. Simply to hold for years and add to a stock whenever the stock price seems to be going nowhere except for down. Yes, you can see the fundamentals improving, but Wall Street just hates the stock. They're not innovating fast enough. Whatever the case is, that is typical over the long run of your journey with a stock. And you have to understand, when we talk about long run and becoming a millionaire in SOFI stock, we're talking about, a decade plus, maybe 2 decades before you get there. That's the long run. Now, I know a lot of you folks are going, hey, I don't want to wait a decade. I don't want to wait 2 decades. I want my money faster than that. Hey, great. Then you're probably not going to ever get there in the first place, because you're going to make a mistake somewhere along the way, or maybe make some of the mistakes we've already talked about today. Maybe getting out of the stock too early, maybe buying into hype or noise or something else of that nature. Maybe you don't stack shares to begin with. Whatever the case is, you're going to put yourself in a spot where you're not going to make it. Typically, multi-millionaire stock makers for individuals, it happens over a lot of time. Now, of course, you can always look back in hindsight and go, well, if I would have bought this stock here and I would have bought, That's not realistic. You weren't going to dump $100,000 into the stock that day on that particular time and then get your return 2-3 years later and turn into a million, turn yourself into a millionaire. It's just not realistic. That's not how it works. Typically, it happens over the long run here. And I know a lot of you young folks are like, hey, I don't want to wait for that. I don't know, talk to anybody who's a decade or two older than you and tell them if they wouldn't mind having a few million extra dollars in their account. I'm sure every single one of them would be like, yeah, absolutely. And to them, it wouldn't have felt like that long to hold looking back in hindsight. But it is so hard to hold, especially as life hits you and you want a nicer house. Or, this other thing over here that you kind of want to do, or kind of want to invest in this now, or stocks are kind of boring, the SOFI, and it's kind of had a rough couple of years here. The numbers look great underneath, but hadn't really gone anywhere. And so something, another shiny object catches your eyes. Maybe this is 5 or 10 years from now. It happens to all of us. You have to just simply hold for the long run. As long as they are continuing to perform on earnings underneath, it is going to be a great investment over the long run. And that is how you actually become a millionaire in any stock. And if you're ready to get serious about this and do everything we talked about, check out the pinned comment. I may have left something special down there for you. If you want to learn exactly how to do that full due diligence on a stock, you want to learn exactly how to do evaluation, you want a group of other investors supporting you and helping you learn all this sort of stuff, and more importantly, maybe spotting opportunities that you don't see, encouraging you to just hold through all the ridiculous narratives and everything else, or whatever the case is, make sure you check out the pinned comment down there, see if a membership's right for you. Again, may have left something special for those of you guys that made it this long in the video. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.